Good turnaround Tuesday, Warriors. How's everyone doing today? You doing okay, Maud, Martin, Mark, Michael? Everyone doing okay? So, just want to keep featuring the revamped dashboard on ForexAnalytix. We have some pattern and plays out there. A new one would be Greg, a pretty aggressive target. So that kind of puts, confirms Celios was talking 114 where he might be interested in selling. Greg has got a 115 target. So these are the kind of things that you get every day. So something that you want to consider is, first of all, joining, and if you're not in the USA, get a hold of Forest Park, and they'll find you a broker where your trading will pay for the subscription. Trent or Justin will help you out there. Just send an email to this address here. Right there, brokers at forexanalytix.com. And let's get to the markets. So looking for a bounce in the dollar, that's going to be the catalyst for a new low in gold that I'm going to be interested in. Maybe another, definitely has to take out this low. A third drive could come in around 1230-ish. So is this going to be a big rally in the Dixie where we blow through Friday's high, or are we going to fail from maybe 68 back, 94.80 or so? That's really going to be the question, as I lean more this way to keep the S&P rally going for one more push up above 2,800. This looks like a 1 and 2. And it was interesting, Steve and I were going over different FANG stocks yesterday, and then they really killed the NASDAQ after hours on Netflix earnings. It was down about $50. So this still could be a 1, 2, 3 with another high coming. I still think there's another push, another jiggle to the upside. Although I would say sometimes I wait for one more jiggle that never happens. But that's the way I see it, as another high coming to the upside. And I doubt if that happens with the dollar exploding to the upside, but pretty negative 4-hour candle here. Best guess is that retracements hold. We take out 1620 and we're going to new lows. So Friday's low in the euro and Friday's high in the Dixie are pretty critical to me for the next direction. Okay, so faded that up there around 95, 95.10, broke around 90 points from there, from 95.20, 90 to 94.30. Now we'll see what this market's made out of. Back under today's lows, we're going to be pretty vulnerable in the dollar, and 94.18 for sure should set it off or to retest this support and maybe head towards that 92 level. Above Friday's high, I think they'll go for the stops over 550, and most likely you're looking at a $97, $96.50, $97. So I believe we'll know by the end of the week. And so, but the fact that I'm leaning towards some type of buy in the precious here, although lower, because we have to make a new low to set up a third drive. And that hasn't happened yet. Low for the move is 36.50. As you can see on the 4-hour, unless it's really a collapse, you're not going to have you've already had a non-confirmation you've had right here. And against this low, which was confirmed, and then we made a new low. So I don't think I'd be short, but I would be looking for potential buying opportunities down around 1230, 1226 in there. So that's what I see. Yeah. Any questions on anything I've covered? You don't have to agree with me. I'm just giving you the my view. I still think there'll be a better break to buy. The end, we might make a new high first. This one will not confirm. I'd kind of be patient and maybe wait for a pullback. This was 12,860, so maybe C 60 from here would take it down to 112, and any kind of fib extension, maybe you get a chance to buy it at 1180 or so. I am sharing my screen set. You may need to log in, log out again. I have an interesting interview today with Peter Campbell. I went to his blog, so looking forward to talking to Peter at the top of the hour. His Twitter handle is at MCM_CT. So stick around for that. Let's have a great turnaround Tuesday. And with that being said, we'll see what Blake is looking at this morning. And Faith, how are you today, Blake?
Hey, good morning, Dale. How are you?
Good, buddy.
So, you were talking about gold, and really quick, I want to cover something regarding gold. Because you know how you always say you can agree with me or disagree with me. I'm going to disagree with you, and let me show you the reason why. Now, it doesn't mean that what you're saying is right or wrong, and what I'm going to say is right. I'm just going to say this is why I disagree with you as far as gold goes, in gold, we are. This is a daily chart, and this is. Let me get rid of this trend line just for argument's sake, and just kind of cleaning up the chart a little bit. We are below a big daily trend line, and you can see we're just skating this really major support. So my fear is if we do break into new trend lows, it's not going to be pretty. That's my only fear, is I would be a little careful trying to buy dips if we dip down to like 1230. I think if we dip down to 1230 in gold, we're gonna dip a lot further than that, because it's like a triple
confirming the breakdown.
Yeah. I mean, you got your daily trend line. You've got the spike low from back here in December. We've got these most recent lows. I mean, if we break, it's gonna probably be pretty gnarly, and that's the thing that I'm scared of the most. Now, let's talk about today, because today is the most important day of the week. Today is the Humphrey Hawkins testimony, right?
Okay.
That's Fed Chairman Powell's very first Humphrey Hawkins testimony. You know what's going to be different about today versus the other testimonies? What's different about today's testimony?
That it's Powell and not Yellen.
Well, that's one. That's good one. They're not going to release a statement first.
Oh, so it's all surprises.
It's all surprises to the market.
Oh, now, you gotta love that.
Yeah, well, I'm hoping it creates a little bit of volatility. So that happens in 2 hours from now. So in 2 hours, we're going to get this, this testimony, and we don't know what he's going to say. It's just going to be kind of out of the blue, and we've got to react to it. So one of the things that that we're seeing going into this is we're seeing.
What if he says, Blake, that Putin doesn't want him to raise rates in September?
I'll tell you. You guys. I can't talk. I can't talk politics. Not saying that I can't. I won't. I choose not to. But man, there was a lot of backlash over yesterday's press conference. Lot of backlash. Like, I'm gonna just leave it at that. But man, that was something.
Yeah, it sure was.
It was something for sure. Again, I'm just gonna stop short of saying how I feel. But what's gonna make today interesting is Powell's going to be talking, and the market's going to have to react, right out of the gate. And the one thing that we could see here is the dollar is actually pretty firm going into Powell's testimony. Now, this is the channel that I think that we're following along, and I may be completely wrong here, because this may be more of a triangle that's being developed. I don't know. It's hard to judge at this moment, but the dollar is pretty firm going into this. I would think if Powell really ignores the risk of a trade war, yes, if he just kind of ignores it and continues on, then the risk is that the dollar really starts to firm. Now, only the thing. So I'm going to ask you this. So what do you think I'm looking at to confirm that the dollar is going to continue to rally?
Probably closes back over Friday's high, or
forget the dollar. What else am I going to be looking at that's going to confirm that the dollar is moving higher?
Gold going down.
Exactly. So we were just looking at gold, and this is going to confirm whether I need to be long dollars or not. Whoops, that's silver. Silver is the same way, but gold.
Yeah.
If gold starts breaking down, that's going to be my cue that I need to be long the dollar.
Okay.
And then the question is, where do you buy? What do you buy? Dollar wise, where are you going to go get long the dollar against? Because now it's like, okay, well, what am I going to do? What am I going to do? I know that I want to buy dollars now.
USD CAD. Stick with the one that got you to the dance.
It's funny. I was actually long the dollar Canadian yesterday at 131. I bought it at 131.30. I think I want to say it's not too far away from somewhere around here. I bought it around 30 or whatever. I got out of it this morning at 40. I just took it off the table. I didn't catch this move, or I got up when I got up this morning. We spiked up towards 131.42, and I said, you know what, I'm going to take it off ahead of the testimony. And of course, I left 20 pips on the table, which 20 pips in this, during summer trading, it is a little frustrating, because I'm like, man, I left 20 pips on the table. That's a bummer that I could have made. So I got out a little early. But yes, the dollar Canadian, I think, is, and it's really clear to me at this point in time that as long as we stay above that support there, which comes in around 130-120, it makes sense from a risk reward perspective to stay long the dollar Canadian. And so therefore I think the dollar Canadian is a great choice. Now, I'm not long at this very moment in time, but that's one that I would be looking at in particular, and knowing that crude oil is pretty weak at the moment. So I know crude's up right at this very second in time. I'm talking about over the last couple of days, crude oil's shown some signs of weakness. So, as long as crude continues to stay weak, the gold stays weak, I think the dollar Canadian is a potential trade, and especially if we get a little bit of risk aversion. Now, you had mentioned about the stock market, and that we could get one more push higher, which obviously could easily happen. But I'll tell you what, Netflix's subscriber growth was alarmingly weak. I'm going to be off the numbers because I don't have them right in front of me. But Netflix was expected to gain 6-point-something million subscribers, only gained like 5 million. So it was like 1.2 million less than expected, or in other words,
they punished it.
Oh yeah, and it continues to get punished, and that's the leadership. When your leadership gets pounded like that, it's a little scary as far as equity markets go. So just keep that in mind.
Canada, Blake, last week, Steve Volge, when we were trading up around 32-ish, was looking for 31 for his entry. So You know, Steve's excellent, and he called that correction very nicely.
Yeah, 31, and I think we made it as low as 31.10. I actually had I had another buy order at 31.05 this overnight, which never got tripped, unfortunately. I woke up this morning and I thought, oh man, maybe you know, when I saw the price of 131.40 as I was grabbing my coffee, I'm like, maybe I got another piece of it long, but it missed my order, unfortunately. But I do think that as long as the dollar Canadian right now stays above 131, it's bullish. Now, like I said, taking a position ahead of, you know, yeah, the Humphrey Hawkins testimony, I don't know if it's really makes a whole lot of sense right at this very moment in time. But I think if you could buy some dips, that makes sense. We've got 2 hours. 2 hours to go. So, but let's take a look at some of the other dollar pairs. So here's the euro. The euro has now we're in between fib levels. So it's, you know, I look at the euro dollar and it's not clear. I when I look at it, you know, I'm thinking, whenever I was gonna, you know, if I'm gonna trade the euro dollar, I'm looking for specific fib levels. Like if you remember our discussions yesterday, I was looking for the 78% retracement up here at 117.55. We never even reached it. We came shy of it, and then we slumped. If you remember our conversation yesterday during the face webinar, we were trading right here. Okay, we were trading right here, and we were already testing the 618. And I said, you know, we're testing the 618, but to me it seems like we might break higher and test the 78% retracement before failing. That was 24 hours ago at this very moment in time. That's what I said. And we did break higher. Now, unfortunately, we didn't get all the way to the 78% retracement. I'd feel a little bit more comfortable if we made it all the way up there, because I feel that we could have some, you know, may have some unfinished business still to make it up towards that the 78% retracement. But anyway, that's ultimately where I thought we were going to go, but looks like the market stopped shy of that. The cable trading very heavy. Look, you know, again, these are all Brexit headlines, but the pound has broken lower, and I'm a little nervous about the cable right now, because the cable is not. I mean, we're developing this, you know, what I thought would be an inverted head and shoulder pattern, and we came out of a descending wedge, but frankly, I expected a lot more of a recovery in the pound, and the fact that we're not getting this big recovery in the cable, you know, back up towards 136, back up towards 137, the fact that we're not making our way back up here makes me a little nervous. And that means that, you know, if you're looking at this inverted head and shoulder pattern the way that I've been looking at it, the scary thing is that this right shoulder that you see here, it's taken a long time to develop, and we're losing our symmetry. And so when we lose symmetry, when we're developing, especially head and shoulder patterns, I like to have good symmetry, meaning this this left shoulder here and this right shoulder are basically equal in time, and in distance too, as close as possible, but especially in time. And right now we've lost that symmetry in time, or we're losing it. So makes me a little nervous about being long the pound. And the scary thing is, I think, is if the pound can't get back over this 133.60 level, that is a very bearish event for the pound if we hit new trend lows. Now, the reason why that is, and I'm gonna be a little bit more specific at this moment, and let me grab a different pen color just to make this easier for all of us to see. We had this high here at 140, basically 143.5. We went as low as 130.5. We've only recovered to the 24% retracement. So if you sell off and you only hit a 24% retracement, if we hit new lows, the risk of a much more aggressive sell-off in this case is quite high, especially when you have such a shallow retracement. I mean, usually we get at least a 38% retracement. we haven't even seen that. We've only seen a 24% retracement, which, you know, that makes me really nervous about being long the cable. And I'm not long the cable. I'm just saying, you know, just, you know, thinking out loud. I'm a little nervous about even considering being long the cable, knowing that we've only had a 24% retracement at this point in time. So that's a little scary. Let's take a look at the Aussie. The Aussie, same thing. You know, I was looking at the potential of an inverted head and shoulder pattern, but now this right shoulder is taking a long time to develop. And I guess what I'm trying to point out with the pound and with the Aussie is if we don't break higher today and the dollar strengthens and we break lower, then the risks of continued dollar strength, especially in those two particular pairs, is quite high, I think. Now the Kiwi also, this one's a little scary too. I know that the Kiwi is a little stronger overnight, but frankly, we're just sitting below this trend line. And like I mentioned yesterday, if gold breaks down, I think the Kiwi is going to come under some pressure as well. New Zealand reported some inflationary data last night that actually strengthened the Kiwi dollar. That's why we spiked up. You know, we're still unable to take out this 68.50 level. So again, if you're long the Kiwi dollar, that is a little, that would be a little nerve-wracking. Like I said, I got out of my dollar Canadian longs. I bought it yesterday, got out of it a little early this morning, frankly. But I'm still bullish as long as we're above 131. And one pair that I took off the table this morning is the US dollar Mexican peso. I bought this yesterday at 7 or 18. I want to say it was 1878 is where I paid for it, but let's just say roughly it was around 1880. I sold it this morning at 1990 or 1893 when we were up here this morning. And as you can see, we're trying to break back down again. But I still think that this US dollar Mexican peso really offers a lot of opportunity down here around the 1860, 1850 level, if we can make it all the way down there. Is it possible we make our way down there? Yes, it is. And you know, are we going down there? I don't know, but I wouldn't mind being on the long side of the US dollar Mexican peso somewhere down in that neighborhood. So and actually you can see the Nasdaq's actually starting to break down just a little bit here. This is a 5-minute chart. Let's go over to an hourly. So here's the Nasdaq, and I guess I want to point out the Nasdaq because of what's happening with Netflix. You know, the Nasdaq actually is trading pretty heavy. The recoveries are not are very shallow, and we actually could be developing some sort of pennant here. Pretty bearish look for the Nasdaq. And I guess the thing is if the Nasdaq starts to break down, you know, what does that do to the S&P? Especially the S&P just failed at the 2800 level the last couple of days. We have some dark cloud cover developing here on the daily chart. So if the Nasdaq breaks lower, then that might be a little ugly. One last thing I want to go over before I turn it over to Steve is let's talk about the yen. This dollar yen is extremely bullish. We even yesterday, and let me move this chart back over. Yesterday we developed a pin bar here, a little gravestone doji. I thought that would at least give us a little bit of downside so we can get long below the 112 level. No can do. The dollar yen it's really in breakout territory. As you guys know, because I've talked about it a couple of times, we broke above this multi-year trend line. Or multi-month trend line, multi-year trend line too, and ever since we did that, it's been extremely bullish. Dips have been shallow. I was hoping that the dollar yen could drive back down towards 112, 111.50 to get long. It is really bucking the trend here, and when stocks go down, the dollar yen doesn't even care, and so that break in correlations is something that I think that we all should be paying attention to, because most of us for years and years and years have been accustomed to, oh, stocks go down, let's go ahead and buy some yen. That's not working anymore, and I think the market is changing. The dynamics of the market are changing, and so that could be setting up for a much different correlation moving forward. And you know what's scary to me, and I'm going to turn it over to Steve here in just a second, but what's scary to me is that we see this, if we see the stock market go down, I have no idea what to do in the currency market. Like it was pretty clear to me in the past, if the stock market went down, I would just buy yen, and at some certain times I could buy the dollar. And if I don't have if it's not buy yen now, if it's not buy yen, the question is, what do I buy? And maybe it's the dollar that you have to buy if there's some risk aversion. But then you have the you have the trade situation, which doesn't necessarily give me a lot of confidence in buying the dollar either. So I'm not really too sure what the right trade is in a risk off type of scenario. So I guess we just we'll find out. I mean, if the market gets volatility starts to pick up and risk appetite starts to wane, we'll have to see what is the best performing currency at that point in time. Because I'm not
thinking
sure
long dollar. I'm thinking long dollar.
You know, that's usually the default what to go to, and conventional wisdom would say that, you know, if there's risk off, that there's probably going to be, you know, people are going to rush to buy dollars. But will they this time around? That's the big question.
They did last time around. So
right. But that last time is a different market, and it's a different administration, and definitely different.
I'm talking about the last break before this big rally. When the market was going down, they were buying
trade, but now we're in a full-fledged trade war. So
okay,
you know what I mean. So I mean, I think that's the right trade. I just don't know, and I think the market probably doesn't know either. Yeah. But anyway, so with that being said, I'm going to bring in my colleague Steve. Steve, are you here this morning?
I know nothing.
Nope.
Good morning, Steve. And by the way, before I pass it over to Steve, I just want to say, if you guys have not talked to the guys over at Forest Park FX, make sure you do so. You can get directly to them from our reimbursement program page, and just go to the very bottom here, and you can contact them directly via Skype or via email right here. There's brokers at ForexAnalytix.com, and Skype, their Skype account. And if you're searching for a broker, or you need assistance in finding a broker that would suit your particular trading style, make sure you look at Forest Park FX, because we partner with them because they're just superb at customer support. They can,
you know, Blake, I got a tweet from Victor Zubarev, who I've interviewed a few times. You know, he's been around a long time, and he was complimenting us on having a relationship with Forest Park FX, that they're excellent. So they have a great reputation, even in Footosphere.
That's awesome. Yeah, they're not super active on social media, but their work speaks for themselves. They'll do like a, you know, kind of like a consultation, and basically just question and figure out what you need, and they'll take it from there. So Steve, how you doing today?
I'm good, mate. How have you been?
Good. Just getting ready for the next hour and a half. Hour and a half from now, it should be a little bit more interesting.
Let's hope so. Let's hope so, because the markets have been extremely quiet. So I'm really hoping that, you know, we're going to get some movement, some volatility, because so far during the week we've actually seen nothing.
I know it's been it's slow, and you know, between the Humphrey Hawkins testimony and the potential volatility that we could see in equity markets, we might see some volatility here. So
to be there for the good times, you have to be there all the time.
That's right. Great saying. That's true.
I made it up.
You guys,
very true.
Have a great interview, Dale, and
Thanks, Mike.
Steve, we'll talk to you soon.
I didn't make
Bye-bye,
that up,
Blake.
Steve.
See
Thanks,
you later,
guys.
mate.
Good hunting, buddy.
Thanks. Back to you.
All right,
Stay
Steve, I didn't make it up.
Good
Hey, mate.
morning.
Hey, I'm here.
Hey,
good.
Stel, how are you guys?
Hey, guys. I'm very good, very good. We just had to have some Canadian data, which was stronger than expected, but really nothing. So
Nothing
we
to
just,
write home about. Yeah.
yeah, we got some US data as well, like industrial production, manufacturing production, but really it's all about Powell.
Yeah, what do you
I
guys think? What do you guys think, Powell? Do you think Powell's going to back off of his, he's been pretty hawkish. You think he's going to back off just because of this trade dispute, or talk more dovish today?
Listen, in my opinion, and Stelios is going to, obviously have the most saying here, but in my opinion, it's all about, first of all, we have no reason to believe that the Fed is not going to resume being as dovish as possible given the circumstances. But what are currently the circumstances? We have a stock market that's near all-time highs, which theoretically speaking should not matter for the Fed, but that's just in theory. But it does, exactly.
So why not do it while the market's near all-time highs? Just continue to build their insurance policy.
At the same time, we have an inflation rate that, even if we take into account the official numbers, is running quite above the target, and that's why they've started talking about a symmetrical target, so it doesn't look like it's getting out of hand. So that's another thing to consider. And so far as we know, we have estimations having to do with the second quarter GDP that are looking quite frothy. So theoretically speaking, Powell should have no reason of not being hawkish. Now, will he be? Will he use, as you very well said, the trade war as a nice excuse to sound more cautious? I think, he's going to use anything he has in hand to sound a little bit less hawkish than he should probably be. I don't know what you think, Celia.
I think you said it all. If you look at it in isolation, there's no reason why the Fed should not continue to be hawkish, given the way the economy is going. But we have all these, uncertainty factors creeping in slowly. Trade wars and these Trump-Putin meetings and stuff. Stuff's happening in the background. So they will use every opportunity they can to be a little bit on the dovish side, but there's really no major reason why they should be. So I think, although we don't have enough, I haven't seen enough of Powell yet. He's only been chairman for some weeks. I think he's just going to be a little bit of the same as the last time, and I don't think we should get any big surprises from him today. I think they're just going to stay the course. They keep going until something major starts happening in the economy.
Probably, yeah. And Stelio, how many rate hikes is the market exactly pricing in as we speak for the rest of the year?
A good question. Let me just check the Fed Fund Futures page. So we have for the rest of the year, okay. So that's 70. So January is 97.70. We're at 80. So we're pricing another 1 and a bit. I can get you exact. Yeah, I can get you the exact percentages if I look at the data.
So to be very honest, because it doesn't look likely that we won't get another rate hike, the dangers of a surprise, in quotes, are probably for like a hawkish surprise, because I don't think that we can easily end up pricing in less than one more rate hike for the rest of the year. Something big will have to happen for the market to start even considering that one more rate hike might not happen. So if we are just pricing above one more, I think that there is always the possibility that we will start pricing in closer to 2 more rate hikes, which we've already heard some of the Fed committee members speaking or leaving the door open for 2 more for the rest of the year, right, Celio?
Yes, exactly. Yeah, and especially, it depends on when we get the third one, But like you said, there were a couple of Fed members. I can't remember the names, but they were, they were saying, okay, base case is 3 hikes, but I wouldn't exclude the possibility
exclude
of
4.
Yeah.
Yeah.
So
exactly.
I think the market is actually pricing it quite fairly. 3 and a bit. I think it's more closer to 3.5. I will, as I said, I will look at the Fed dates and I will get the exact percentages a little bit later on. But I think that's a fair valuation. 3 is done, 4 maybe. So, and the market's going to oscillate around that. But like you said, the risk is probably for the market to just go ahead and price a little bit more of a chance of a fourth one, because 3 is going to be. I think that's really is the base case scenario.
Now, having to do with the technical outlook, I have to say that if we get some kind of a hawkish interpretation to whatever Powell says, that's going to play out very nicely with the outlook we have here in the Euro USD. Euro USD is still getting rejected from this trend line, so that might actually produce another push lower, and we might get this scenario. A break of the 115 flat bottom triangle and then pushing lower one last time. So far, the cable has been getting rejected from the 133 area, so we might get like one more push towards the 130 area once again here in the cable. The Aussie is trading below the 75 cents resistance, and as long as that's the case, we have to keep respecting the downside. I know that Blake went through them, so I'm going through them very, very fast. Same thing with the Kiwi. It's trading below the 60, the 68.70 area. So as long as that's the case, also the dangers are for one more push to the downside. On the other hand, if we look at the USD yen, and let's go to a 4-hour chart in the USD yen, like seeing some hawkishness will obviously help. The USD yen looks like it wants to resume higher. Let's also get an extension. Then there it is. So it looks like it wants to resume higher because it's actually within a triangle after breaking above the 111.50 area, which is now going to be support from this point on. So this is a triangle getting dollar positive outcome to his testimony will help the USD yen push towards the next area of resistance, which is at 113.20. We were expecting some type of a pullback here, but so far we've got like a pullback, but it's like a very minimum one. But that doesn't mean that we should get more than this. We can easily just push higher from here, go to the 113.20, and then perhaps like get a deeper pullback. So at the same time, metals seem to be breaking down, all of them. Gold is barely holding this previous low, but look at this. The way it's been trading, it's extremely heavy. We have no reason to believe that it's not going to zoom lower. Silver, same deal, broke below a very long-term triangle, came back, retested the broken triangle support as resistance, pushing lower, currently testing previous lows. A horizontal area of support. If this area actually gets blown out as well, I think there's a potential for an acceleration, at least towards the $15 area. Crude, on the other hand, and if you remember, Dale, I was showing crude yesterday, and I said that I actually showed the 4-hour chart in crude, this one, and they said that, listen, it looks to me like crude wants to go down and test the $68 area. Actually, that happened within just a few hours after the webinar was over. We got an acceleration lower. We tested the 68, but the issue is, does this look like it's over to you? Does this look like it's over to you?
No,
because it doesn't to me. Yeah, right.
We were talking about Netflix. We were talking about Netflix yesterday, right before it crashed yesterday.
Yeah, unfortunately, I don't think we can have a look at Netflix because the market is not on yet. Let me see.
It's not
probably we only have.
Probably it's not reflecting the aftermarket.
Yeah, but Stelio, can you find me the quote?
The pre-market for Netflix.
The pre-market quote, yeah. So we see here on the chart where we will open. I think it was like 14% down. It was at some point yesterday.
1 second, I'll find
down $50.
Okay, so it's down. What the hell? Sorry, I'm just seeing here. 450. Wait, I know pre-market 350.
No,
so down $50. Down $50.
350. So here.
Yeah,
so actually Netflix is going to open here where I'm marking at the moment, right?
A breakdown.
Which means that this is actually a confirmed breakdown, right?
Yeah.
Not only that, perhaps this
What a
was
gap.
high. Yeah. It's
almost like it's going to leave an island.
Here.
That whole thing will be an island. Yeah.
Yeah. And opening below.
And it might be like the television series. Those people long up there are going to be lost.
Yeah, that's a good point.
Nice one.
Yeah,
they're stuck on the island, man.
Yeah, so as it seems, this very big RSI divergence that we had here seems to be playing out very nicely. I mean, this is a huge gap lower, and I think that this ascending trend line support should act as resistance if we get some kind of a rebound. So that's probably going to be a nice area to be looking to establish fresh shorts after that. And the question is, we know that wait a second. I have a great chart to show you. I actually saved it on my phone because my wife was driving. You need to see this. You really need to see this, Dale. Let me save it on Dropbox from my phone because you really need to see this.
Okay.
Do I need to see it or do I just log off?
No. You have to close your eyes. Now that I'm going to stop, please.
Blindfold them.
Yeah. Okay, so I'll have it here in 2 seconds. I'm already uploading it. There it is. So look at this. What do you think this is? This is the Nasdaq. The green line is the Nasdaq. And the black line would have been the Nasdaq if every single stock on the Nasdaq had an equal weight.
Wow. Yeah, so 5 stocks are holding up the whole Nasdaq.
So look at this. This is a construct built in the sun. Not exactly in the sun, but I mean, it's a story of the funds making the whole index, right?
Yeah.
Look at this divergence. I mean,
that's not healthy.
This is an astounding divergence. This cannot last forever.
Nasdaq at new highs and minus QQQ at new lows. Should be some regression to the mean here.
Yeah, exactly. So Netflix already one out of the way, right? I mean, technically speaking, it's currently breaking down. So if we get another one breaking down, I don't know which is going to be first, like Facebook or Alphabet, which means Google or whatever. I mean, it's like cutting off the legs of a chair. So it doesn't have many legs. I mean, in this case, it has like 4, 5, 6 legs, at maximum. So if 2, 3 of them get out of the way, Nasdaq is going to be in very, very, very serious trouble, right?
Yep.
Here is the index, and let's remember what we were saying yesterday, that this looks like an ascending wedge.
Yeah.
So, I would be quite cautious. Especially if this ascending trend line, the ascending trend line support breaks. Oh, I wouldn't want to be long there.
Is that what you're waiting for to short it?
Oh, yeah.
You're waiting for a trend line break, the dotted one? Okay.
Yeah, absolutely. And let's not forget here, let me switch it to a weekly and zoom out.
Yeah.
It's not Amazon. I mean, it's not as parabolic as Amazon is, but let's be honest, it's not a lot less, right?
Yeah. That's
so yeah, there's no question about it. I mean, those things are unsustainable. I mean, this thing cannot go forever. It could never go forever. And, at some point it has to end. And, when it does, it's going to be spectacular to watch. That's why I would advise people to be, I've said many times that I'm cautiously bullish, simply because so far we've seen no technical damage done But on the other hand, don't forget that even having to do with statistics, how mature this business cycle is, etc., don't forget that if you're buying up here, if you look at the big picture, so if you look back like maximum a couple of years later from today, you're going to be realizing that at this phase of the bull market, people were collecting pennies instead of in front of the train on the train tracks, right? Because that's more or less the situation now. I mean, don't doubt that. I mean, a few years ago, the Nasdaq was trading down at 1,000, just above 1,000, and we're currently at 7,300. Right? So it's already 7 times the value it started from after the Great Recession. So obviously, the next big move, I'm not saying that, this is a high, but the next big move cannot possibly be to the upside, right? The next big move, whenever it comes, is it in a few months from now? Is it in a year from now? Is it worst case scenario, let's say in 2 years from now? It's going to be to the downside. So, stay nimble, buying still is the way to go, but you need to keep the big picture in mind. I mean, you can't really lose the big picture here because, you're going to get run over, as simple as that. Now let's have a look at the DXY. We already saw that we have a triangle in the USD yen. The thing is that we likely have a triangle in the DXY as well. I mean, initially I was looking at this like an ascending wedge, and it was a 3-drive formation also. But the more we consolidate here, the higher the likelihood that there is an alternative interpretation here, like we might be in some kind of a triangle like this, right? Something like this. So I would still be looking higher in the dollar. It doesn't matter that fundamentally. I think that in the long term, the dollar is going down. There is no other way it can actually move in the long term. But that doesn't mean that this is going to happen today or tomorrow or within the next 2 months. So far, we're seeing a consolidation after a decent move higher, which came after a very strong move to the downside that began and at the very, very, very start of 2017 and actually found the bottom in February 2018. So that was like a 13-month move. So, it's quite healthy to see a correction to that, and nobody tells us that it's over. So I would be looking yet higher. I mean, towards the 96.50 area, somewhere here. The 50% fib is at 96.04. We have then a horizontal resistance area at roughly 96.40, 96.50. Then we have the 61.8 at 98. To be very honest, I don't consider it very easy that we're going to see prices above this 61.8. So, the higher we get and the closer we will end up finding ourselves towards the 98 area, the more eager I'm going to be in, looking for opportunities to actually be short the dollar. But not yet, because the current technical structure, as I said, points to further gains in the short term as a more likely scenario than anything else, right? Only if we break above this 93, let's call it roughly 93.20 area, and especially this 92.70 area, I'm going to be a believer that the move lower has resumed. Until then, I think that the chances of one more push to the upside are quite high. Okay. Okay, we have a question about the Swissy. We already showed that the Euro USD is still finding resistance there. The Swissy is more or less mirrored, not exactly anymore because the Euro Swiss is not pegged. But having to do with the Swissy, I said yesterday, and it still applies today. This was likely a triangle. Theoretically speaking, we've already seen an incremental new high. So theoretically speaking, this would fulfill the minimum expectations of another thrust higher from a triangle. But usually they don't just give you an incremental new high and then reverse. So as long as we remain above 98.5 cents, I would be looking higher towards the 1.018 area as a more likely scenario. So I still maintain a bullish bias here in the USD Swiss. Okay. Now, as I said, as I was saying with crude before, I think that yesterday's move is a very big one. We're seeing a short-term consolidation, and it doesn't seem like the crude is done, moving lower. So I would be looking for the 66 area next, and I do think that we're going to see the 66 area print again. We also have a monitoring this ascending trend line. You can see here it was acting as resistance. Now it's acting as support. This also confluences, in the more the days pass, confluences with this horizontal area of support resistance. Both of them are roughly at 66.20. So, and the 78.6 of the last move higher is also there. So more or less that's a double or triple confluence of resistances if we actually find it in a few days from now. So I think the next area to be looking for support is the 66.20 area, and it looks like to me that we're going there. Now, let me not forget, I wanted to show the Euro Swiss as well. And why do I want to show the Euro Swiss? Because that's the plan we had made about the Euro Swiss. I mean, I haven't touched the drawings at all. I was looking at this like a likely pennant. And look where we got rejected yesterday, the day before yesterday, actually. It was right at the confluence of these resistance, the pennant resistance and this horizontal support resistance area. So especially if we break below this support trend line, I think that the Euro Swiss has more downside. If we do close below this trend line, I think that's going to be all the confirmation I will be looking for, to be looking for more downside in this. So, you know, keep that in mind. I think this is a nice technical setup. It's not a pair that's usually moving fast, usually, because there are exceptions like this move lower that we got from the 120 area. But I doubt it that this is it. I mean, this move lower looks quite impulsive to me, and at the very least I would expect that this is an A, this is a B, and there is one more leg lower missing here, right? I mean, looks like a very nice technical setup. So I wanted to show that. I wanted to show it yesterday as well, but I completely forgot to do so. Look at the gold Nasdaq ratio. Yeah, sure, we can do that actually. Should I look at the gold Nasdaq ratio or at the Nasdaq gold ratio actually? Actually, I'd rather look at the Nasdaq gold ratio. I know it's the same thing inverted, but I think it makes a better impression of seeing this over gold. So we're currently, yeah, the Nasdaq is currently valued 6 times gold, right? And you can see that this has been a very strong move higher as well. We bottomed out in 2011, when we actually were more or less at parity. So, you know, you could either buy one stock from each company in the Nasdaq or an ounce of gold. And currently this ratio is up to 6, right? So you need 6 ounces of gold to buy a stock from each of the companies in the Nasdaq. And yeah, this is due for a correction as well at some point. Just look at it. I mean, this is a very, very prolonged downtrend. It had only one decent correction from the end of 2015 until it double bottomed in the middle of 2016. So yeah, looks interesting. Yeah, thank you. Not a bad suggestion actually to have a look at it. Okay, so let's see what else there is to talk about, because in all honesty, in all actuality, since yesterday, we've had very, very few things that have been moving. I mean, the exact same situation that we found ourselves yesterday in the Euro USD, this is the exact same situation we're in at the moment. Cable is quite a lot weaker. I was writing in the chat room yesterday once again, when we were actually trading somewhere at 132.60, that you know, I'm afraid that the cable is being rejected once again from the 133 area, and we're actually now seeing an acceleration lower. So, you know, I didn't get trapped by buying above this descending wedge, because I needed confirmation by seeing a daily close above 133, and that never came. So, you know, I consider even the likelihood of seeing a move towards the 61.8, which is at 128.50, or at least a retest of the 130 area. Okay, so cable definitely still looks weak, and you know, for me, the line in the sand is 133. Unless I see a move and the close above it, I'm forced to keep looking lower. I mean, this is a clearly defined trend, right? It's as simple as that. Let's have a look at the USD SEC because I don't remember if I showed it yesterday. But you know, USD SEC got, whoop, I didn't mean to do that. Yeah, so USD SEC got actually, there it is. So USD SEC got actually found support once again in this ascending trend line several days ago, but it failed before actually reaching the highs. So it's more than obvious that there is a loss of upside momentum here. The RSI has been diverging for a long period of time now. So in my opinion, this 870 roughly area is quite an important area of support. If we do see a close below it, I do think that the USD SEC can extend to the downside. Now, as long as it's holding this ascending trend line, obviously, you know, the smart thing to do is keep looking higher. USD NOK has completely stalled. This is actually a very weird behavior because USD NOK was not reacting to oil's weakness, to oil's strength for some time, and it now doesn't seem to be reacting that much to crude weakness that we're seeing. Regardless, I have to reiterate here, there is still an opportunity, a technical opportunity for a breakdown, but we have to move lower fast because we don't really want to lose that much symmetry of this potential head and shoulders formation. So I think that as long as we remain above 8, you should respect the potential of more upside, especially if we break above 820. I think that we should extend towards this trend line resistance. You can see it here if I zoom out. But if we do actually see a move towards 8 and the break below 8, that actually triggers a head and shoulders formation, which in essence is going to target roughly the 870 area, which is, you know, near the lows. So this is a head and shoulders formation with a decent target. It's going to take us, you know, near the recent lows. And I think that's going to be a nice setup. I'm actually going to be trading it if that happens. Don't forget that also the 200 DMA is exactly at the 8 level as we speak. So 8 is like a confluence of supports. I mean, it's a horizontal support area. It's a 200 daily, simple daily moving average. It's also the neckline of this head and shoulders formation. So key level. And to the upside, 820 is a key level. We're currently exactly between them. So I wouldn't say that I would advocate for somebody to be buying or selling here. But I think that a break above 820 or a break below 8 should be a good buying or selling opportunity because in all probability, we should see a decent extension to either of those sides if we do get a breakout. Now, let me go through some of the crosses because I had some question on the crosses yesterday. One of them is Euro-Aussie. Euro-Aussie seems to be within a pennant. This price action that we're seeing here definitely doesn't look bearish to me. Just look at it. This looks like a consolidation after a move higher. So I would have to say that if we do see a break above 159, I would assume that we would easily come up to retest the previous highs, right? On the other hand, if we do break below 157, yeah, that's going to change my mind and I'm going to be looking lower. But as long as we remain above 157, I think that the chances are for a break higher instead of a break lower. Let's have a look at the Euro Kiwi. I actually think that we had a question about the Euro Kiwi yesterday, which I didn't have the time to cover because the interview had to start. Euro Kiwi seems to be within a triangle. Let me readjust a little bit these lines. I think that, you know, we should be watching this 170.80 as support. I think that a break above or below this triangle should also extend somewhat. You know, support is at 166.30. Break above there should probably test the highs once again. The highs also, the previous highs also confluence with this 127% extension of the last move lower. So I think that 175 is the upside target if this breaks to the upside. While if this breaks to the downside, I think that we could find ourselves once again trading at the 166.30 area. Now let's have a look at the pound crosses, the equivalent pound crosses, the pound Aussie and the pound Kiwi. Pound Aussie trapped in a channel after a move higher. Now, you know, there's a decent probability that this would extend once again to the upside, perhaps to come up and find these previous ranges, support, and test it as resistance. And then we can see what happens from there. We might get a reaction or whatever. But, alternatively, if we break below the 200 EMA, which is also channel support, we should see a move lower. So I think, there's not much to do until we get a breakout here as well. So, all of them, although of these crosses seem to be consolidating at the moment. And this is the pound Kiwi, found a high once again on the 78.6, now coming down to test this previous low. The thing that makes it look a little bit more bearish is the fact that it actually got rejected from retesting this ascending wedge. But still, I would need to see a break below this area to look for an extension lower. Otherwise, a break above this high should extend higher. I think we're going to know quite fast. Interview time, Dale, right?
Yes, buddy.
Okay.
Great analysis, buddy.
Is your guest here?
He is here.
Perfect. So enjoy the interview, and I'm going to see you tomorrow.
Okay, brother. Okay, everyone. Peter
Bye-bye.
Campbell's with us. Peter's Twitter handle is MCM_CT. So, Peter, I'm going to pass you the ball, just like the World Cup here, and make you the presenter. I want to thank you in advance for taking the time to address our community in FACE today. So you'll have the opportunity to share your screen, and looking forward to hearing your voice and seeing what's on your radar. Hi, how are you, Peter? Can you hear
Dale,
me?
how are you? Nice to be with you guys today. Can you hear me?
Yeah, I can hear you clearly, Peter. Great for you to take some time out of the slow trading day to be with us.
Yeah.
Summer's over.
Yeah, it's before 9:30. So for me, that's slow trading, because I generally trade the US. So although I focus a lot on currencies, and you guys are talking about the dollar, and I have some interesting charts to share with you guys on the dollar.
Okay, but before we get there, I'm always interested in how someone ends up in this industry and becomes a trader. Can you just give us a little overview of what brought you into this, maybe what you were doing before, and who was an influence over you to get to where you are now?
Yeah, well, I would say I grew up as a classical musician. So I went I studied at Juilliard and at Manhattan School of Music.
Wow.
And I did a lot of my majors were piano and composition. And believe it or not, whenever being a pianist isn't really a great thing for trading, but being a composer is an amazing thing for trading, because what I've found in my work as a composer is that people generally want harmony in their lives, and this is something that they want harmony. They search for harmony. They search for example, profits, and in composition, you don't have harmony unless you have the dissonance. In fact, creating a resolution, a place of resolution, a place where a direction can be sort of resolved and reach a stopping point happens only because of a little thing called chaos, which is called dissonance. So creating, accepting and working with dissonance and also rhythm was a big part of my work. And I ended up leaving. I did a lot of film scoring and TV commercials and stuff like that, and it just became overwhelming process for me because I didn't go to school to become a musician that lost my ability to be a musician. I wanted to be honest with my craft, and what I felt was when I was getting paid by all these people to write music, I lost my ability to compose for myself.
You were being commercialized.
Yeah. So I tried to compose for about a year, and I couldn't come up with anything, and I decided, okay, well, all this new media stuff looks great, and film scoring, I don't need to do that. I'd like to do something that's less emotional for me and more intellectual. And so I started getting into special effects and film production. And the interesting reason that happened was because I had been doing a lot of media work, which was involved with Todd Rundgren and other stuff, where we were combining sort of dynamic nonlinear content in terms of sound with also video and animation and 3D. And me as a programmer, it sort of came out of it. That's my primary work, actually, is when I was composing, I was in the recording studio all the time and doing film scoring work. It's very, very advanced. It's a very difficult job. And so inevitably you need to, you need to do things that the software that you have, or at least in those days, couldn't do. So I started writing my own tools. And that's how I got into programming. And what I ended up finding out as I did that was that in order to manipulate sounds, in order to manipulate the content that I wanted to manipulate, trying to do things very perfectly was actually a contradiction in terms, because what people notice in nature is imperfection. They look for imperfection. What they seek is perfection. And so what I found in my work in terms of special effects, in terms of working with imagery, was that I had to harmonize with the imperfections of the artwork that I was working on, and then that would create a really believable result. And this was a huge point of evolution for me, because it's actually the noise that screws people up. And the same thing can be applied in trading. When people try to photo retouch, for example, or they try to composite images, or they try to create special effects, one of the things they don't do is try to understand what's going on in the substructure of what they're putting together. And in the end, oftentimes you get pretty crappy results.
So are you dealing more with, Peter, are you dealing more with imperfection in the markets than perfection? Because I have an expression,
yeah.
I have an expression that it's don't expect perfection at the crap table, which is, you know, what the markets are. Now, I'm sure you find, you know, rhythm and harmony. I mean, there's actually something called harmonics that people use in the market. So, you know, everything's math, isn't music math too? And tell us what the similarities between music and trading that you've discovered.
Well, the biggest similarities that I found, and this is how this all works, is that firstly, you know, for me, I found that understanding how to handle noise, your approach or your algorithm or your process, is absolutely integral to being successful. Because, you know, when you're trading, you can't be perfect. You can't be precise. You need to be thematically correct. And in order to become more precise, you need to actually be able to dissect what is your content, what is the signal, and what is the noise. And then you can abstract the two to get out from each other. And so what I figured and what I learned from every area that I ever did any work on is that that theme applies throughout sound, music, and markets. And ironically, I had a lot of algorithm work for, you know, for manipulating sounds, and I was looking to learn more, and I was also doing the same thing, similar algorithms for visual content. And this was when Photoshop was really, really early. So I was writing Photoshop filters and stuff like that. And in those days, there wasn't like support like there is now. And ironically, JP Morgan picked me out of a forum and said, you know, your algorithm work is more advanced than ours. Can you come in and talk to us? And bang, and I ended up on Wall Street because they thought that my work would be relevant in derivatives. And so that's the long answer to how I ended up on Wall Street.
It's a great answer. And you're the first trained musician, composer I've ever talked to that's made the transition to trading. So I find it fascinating. So you say you have some views that you want to share with us in the dollar and the S&P. Let's talk about what you have up here on your setup, the different colored dotted lines.
Yeah, I just want to add one more thing because
sure.
I think it's really.
It's your interview.
Yeah, the theme what I've learned is that the most predictable things feel like the most unpredictable, and that's been in every aspect that I've had to apply any sort of scientific study. That's not saying that things can't become more unpredictable when they feel unpredictable, but the fact is that if you can come up with sort of a set of coherent rules, chaos is very predictable. What's not predictable is consonance. Something that is resolved and harmonic in terms of I'm not talking about a harmonic in terms of fib ratio. I'm talking about in terms of being even and consonant sort of. That's not predictable. You don't have any information in there. But when you have a chaos, it becomes very predictable. So I wrote a bunch of tools to actually help deal with the idea of what the central banks markets, because what they're doing essentially is creating consonants. They're creating a very smooth market, and they have done that for a very long period of time. And so there's very little information in the market. If you go to a very short time frame, maybe you can find more dynamic information, but on a lot of levels, you just don't get very much information out of the market, and it is the reason that so many hedge funds have had really difficult time getting performance, is because the diversity of activity that normally happens in the market has become very consonant. It's become self-reinforcing, and everything does the same thing. And then within those things, volatility is suppressed, or it was suppressed. I don't believe that's going to continue. Yeah, it's still suppressed compared to normal, but I don't think that's going to continue, because I think that the one thing that is predictable about something that is very static or smooth is that it will become very not smooth. It's not a question of that will happen. But anyway, the other aspect that I think I learned from my experience as a composer was a respect for nature, and and also as working with imagery, is I learned that nature has its sort of natural fractals that are very organic, that you really have to respect them, and they definitely apply in markets. So rhythm and timing are huge elements for me in my work. In the chart that we're looking at here, it's kind of interesting because what you're seeing is the S&P. The primary one I want to look at is the S&P.
Okay.
Because I don't know if you can see my mouse. Can you see my mouse moving around?
Yes. See the cursor.
Okay. Basically over here, you can see we have some little green dots at the bottom of this chart. These are basically areas in which I would expect a bounce, for example. They occurred here as well. These areas are I would expect a reversion back down. But the interesting part of this chart is the cycles. And this is sort of a timing mechanism where I'm backing out the sine wave oscillation in the markets, as it were. So I'm looking at what is the waves cresting in the market, and when do those waves break unexpectedly. And so when the waves break unexpectedly, you get an impulse, which is this line over here, you see. So every time we get a magenta line, basically it's like a wave, a ripple on a pond. Essentially, energy. The energy is not moving in terms of direction. What it's moving in terms of oscillation. So we're oscillating, and then when the wave crests, it falls back down. So now what happens in nature is that when you get multiple waves coming together, for example, instead of at this line, this being a crest where the wave proceeds back down, you might have several waves come together and all of a sudden blast this wave out. And all of a sudden we're up here in the market. Now that would become an impulse because we've now taken a tremendous amount of energy and overwhelmed what would be a cyclic oscillation. And so that's what happened here. We had a very, very big impulsive cycle. And that was basically a bunch of different energy waves coming together and forcing a breakout over here in September last year. You don't see it on this chart, but that's okay. I have another one where you can. And that creates an impulse wave. Now, what happens in an impulse wave is after the impulse wave, you need a crashing floor wave. So you have this huge wave that transports water, as it were, or transport prices, as it were, and that's exactly what happened here. And then you have, okay, this wave has to resolve itself. Now, how does it do that? It crashes to shore and dissipates. So the process of dissipation means that each wave becomes a smaller wave. So as the energy gets basically transmuted, what would be the word? Well, as it changes, as it's coming into a different form, landing on the sand, all that energy is broken down and turned into dissipation energy. So I think of markets in terms of energy, and so here we have impulsive energy, and here, so a full impulse is basically a situation where you have a breakout over an oscillating cycle, and then where you complete that with an oscillation. So you have, this is no longer oscillating, this is a breakout, this is an impulse, and in order to finish an impulse, you need to have an oscillation. So then we have one oscillation over here, and that now creates the end of an impulse. Now the next thing that usually happens is you get dissipation, and so you see we get second and third end. This is actually a fourth end, and today we're getting a fifth end. Now this is an old chart. This is actually something on a server somewhere. You can see on MCM here, and I don't have it labeled as fourth end and fifth end because I've never seen them before. So I actually don't. I have the ability to do it. I just turn it off at 3. So recently I've had to turn it on so that we track basically up to 6 or 7 cyclic oscillations after an impulse. And the reason is because this impulse was, I think, the biggest impulse I've ever seen. It was the most outrageous blow-off, commodity-style blow-off in a stock market, and that is not supposed to happen. And the amount of energy required to dissipate that now is beyond a normal third end or even a fourth end. It's a fifth end. And so what we've done now is basically dissipated all the energy of all the people who invested themselves in this and still think that something is going on. So people from this cycle expended an awful lot of energy. They lost a lot of money in this process, but then they believed it's still happening. And that's sort of the same kind of activity. It's an energy. Basically, the way I look at it, energy, and energy sort of follows the same form, whether it's ocean waves or ripples on a pond. They have a sort of similar connectivity. And, then I wrote this thing here. This is interesting because what I want to do is gauge how compact the energy is, the cycle, the sub-cycles are. And so this is a subdivision of the oscillation that I do in the market. And so when we go to the top of this oscillator, as it were, and all of these little 5 bands become very tight, then the market is wound pretty tight and ready to do something. And usually it means that it's going to consolidate or pull back if we're up at the top, and it usually means that we're going to bounce, for example, right here if we're at the bottom. Now, as you can see, these cycles are pretty prescient. You know, they caught here, the market was so fast that it didn't catch the low very close. Normally it could. I have other versions that do, but you know, basically this is where the cycle crested here. This is where the wave crested. We got a bounce here, it crested again. We got a pullback here, we crested again. We got a bounce, another bounce, a cresting, and then we got this bounce. Now, I think personally, this is just conjecture, and this is just my opinion, and my opinion was wrong over here. So basically, this is a fourth end, and I had a beautiful set of longs through here into the fourth end, and then a bunch of shorts all the way down right into the lows. I covered down at 27.13. If anybody follows on Twitter, then you can recall that there was a lot of emotional energy there, and that's around about where I covered. But the thing is after a fourth end, the normal situation is that was conjecture on my part because I've never seen a fifth end on a daily chart. Basically, you would bounce, not exceed this high, and then continue, and then create an impulse. So basically, you see this blue line. If we were to have bounced just to here and then broken that line, we would have created these transport waves. It would have been an impulsive wave down. And that is what I thought would happen, and I think that's most likely to happen out of this fifth wave. So I think that the inflection point we're at right now is pretty large. Now, I'm going to show you guys something else. Where is it here? Because this goes with that. Sorry, it's me. Come on. I posted these charts on.
You want to get to we're starting to run a little bit low on time. Would you like to get to some forecasts of what you're saying?
Yeah, that's what I'm doing right now. Basically, come on. This chart's taking a while to come up here. Come on. Why is Twitter so slow? This is a great chart. This is a geometrics chart when it comes up. There it is. Okay. Now, what you notice is, coming from my background as a musician, I use all sorts of different timing, and each one of these yellow dots is what I call geometric Lucas timing. And then these towers are stress towers. So we got a big stress tower at the high on the S&P 500, and we got what's called stress level overshoots here that broke out over the sort of geometrical squares, and that is a very significant event. Now, sometimes we'll get another bounce and get another tower like we did over here, but either way, we're at major timing for top within this square, within a turn, and that drops into basically the end of the month if we're gonna drop. And then what I do is
could we rally one more time to your upper green dotted line, 2830-ish?
Yeah, I think
that line.
I definitely think that's possible. As you can see, we're into some pretty significant support here. Mm-hmm. So if we were to break down below 2790, or we were to break down below 2785, I think that the market's done. But if we hold that support, then we may get one more push up, which would get a tower situation going, stress tower like this, similar here, and then that would lead to a very significant drop. Personally, getting the weekly cycle, getting the daily fifth end cycle, like I showed earlier, is a very significant event. And it's significant for a number of reasons, because if the market breaks out over that, over the cycle we get this month, then counter to everything that most people might feel, we could get a huge ramp in the market. I don't really believe that's likely. I think that, and I think the market will pull back much further and then consolidate, go higher. Let me show you a few other charts I think that are interesting about the dollar, for example. This chart I posted earlier, you guys probably have seen this. These are some symmetry plus the fourth end, and then here we'll get the fifth end probably today. This is on the S&P cash. So at the end of the day, we'll probably get a fifth end on there. Now here's the dollar. Now this is cycle analysis on the dollar. And I think this is really interesting because this is multifractal cycle analysis, different time frames. And basically, the dollar made a complete impulse down to an end, and then it's doing something where normally we would have a resistance cycle here, drop and get a second end, and then go up. But we've gotten a complete impulse down, and now we broke out over this cycle. So this is very bullish. As long as we stay over 90, let me see if I can zoom in here. Basically 98.84, as long as we can stay above there.
93.84?
93.84, sorry.
Okay.
Thank you for correcting me on that. Obviously, I'm old.
Well,
my glasses.
You know, what's 500 points?
Yeah, exactly. But if this is an impulse, then we're going to exceed the previous highs. Okay. Now, why do I think that's likely? Well, because when we look at what's going on the dollar, we have on the quarterly chart and on the monthly chart very important cycles. So you can see here was a support cycle, generated a huge move. Here's another support cycle, huge move. Here's another support cycle. We have successfully held that cycle combined with what's called a bullish retracement cycle. So this bullish retracement cycle means we have a lot. We're probably going to go at least in the next move to exceed the previous high from 2000 and let's see 103, wherever that is, and very likely quite a bit further. And so the dollar setup is a very interesting setup, and another reason that that I like this setup is because when you look at, as I go through, this is the shortest time frame, this is the next shortest, this is the next shortest, and that's the quarterly. We're in a confirmed impulse here on the upside at basically around 92. We broke out, and that impulse holds, and you've got quite a bit of work to do to unwind this. And so if you look at it on this time frame, we're going to need at least second ends to unwind this impulse. That means that we have probably another month to 2 months before we even get through with this daily impulse. And then we still have to unwind this impulse, which that's going to mean 4 or 5 months. And then we've got to deal with this cycle, and we can just look at these ones, and they're generally 6-8 month cycles. And then we've got these quarterly cycles, which is basically pointing out about 2 years. So it looks like about 1.5 years minimum to me of dollar rally.
Okay,
and I think
that's a big call.
Yeah.
Okay. All right. Well, I really appreciate you sharing your intricate and very insightful views, and you're sharing your algos and your methods with us that some people may have an interest in wanting to follow through on this and get to know you better. Would you like to show your blog now, Peter, and how people could find you?
Yeah, you can find me where I was on Twitter over here. You can find us on Twitter, MCMCT, and MCM_CT, and MCM-CT.com. Okay. Now, so you guys know, I'm what I do for a living. I write software, and I run money. So, so what I do, what I'm sharing on my Twitter feed is the results of my work. I don't charge for it. It's not my focus to.
Are you a registered investment advisor? You have a hedge fund. How do you run money? I
run managed accounts as a CTA.
Okay. Okay, cool. And what's your minimum?
$2.5 million. and that's should be about 10 million probably, because I don't you know, I write trading systems, and the trading systems use a law of large numbers basis, which means that for me to extract noise from the market and deal with imperfection, I want to take many shots on goal. So I will build a position with maybe 100, 200 orders, and I'll get out of a position with 1,000 orders, for example. And that creates a high level of fidelity and accuracy at the same time as it creates extremely high friction with the market. And so the higher the amount of money I'm running with those systems, the higher the fidelity and the smoother the performance. So I'm probably raising the minimums up to that.
Okay, well, nice to know some of the 1%ers that could open with 12 million.
Well, it's mostly
institutional. Free. Yeah.
Yes.
All right. Well, I tell you, it's a pleasure meeting you, and I think that I hope you still enjoy playing music, and it's a great outlet. I'm a singer, and
yeah.
I love music, and I hope you don't give it up, because the markets may fill up our wallets, but music nurtures our soul.
It does, and I think people don't realize how much music can affect your
mood and health.
Everything is an input,
right?
Yeah, and when you get I listen to a lot of music. I did a lot of rock and roll production because I did commercials. Cool. I did this project Michelob Light Up the Night a long time ago.
Yeah.
And we worked with everybody. It was fun. But but when I want to grow or learn or evolve, I listen to stuff like Mozart Requiem or a lot of Bach. It's amazing, the mathematics in there, and it's amazing how when you listen to that stuff, it actually affects you psychologically positively in other areas of your life. I agree with you.
All right, great meeting you, Peter, and I wish you all the success in the world. I appreciate you taking time out to show us your stuff, and I hope that pips and dollars rain down on you this summer trading season. Good hunting. You're now my trading warrior brother, buddy.
Yeah, thank you. Well, I look forward to coming back and visiting with you guys in the future.
Thanks so much, Peter. So everyone, you could follow Peter Campbell at MCM_CT. Everyone have a good turnaround Tuesday. I'm taking an ice crack trade at this 1230 level in gold, risking 10. We'll see what happens. Good hunting, and most of all, remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios. Thanks again, Peter.
Okay, thank you.